We're waiting for an open. Stock looks to be more or less flat. This after what were fairly large losses yesterday, of course, following the movie theater's operator's second share sale in a week. CEO Adam Aron actually trying to gain support for a plan to issue another 25 million shares. Remember, they basically reached their full authorization. There were around 520 million shares. That's all they can issue. Last night, he sat down with Trey Collins, the owner of the Trades channel on YouTube. Take a listen.
If you arm us with a tool to go find value-creating opportunities for AMC shareholders, we can do that. If we're not armed with this tool, then you're tying our hands behind our back, and you'll make it just that much harder for us to land some of these attractive opportunities that benefit us all.
Attractive opportunities are the ability to continue to sell stock into a market that's willing to value this company at some $25+ billion equity value. Adam Aron wants to just sell as much as he possibly can, because in doing so, you have the opportunity to significantly reduce their debt load. I mean, they've already raised, I think, what is it, almost $3 billion at this point since, this all began. They still have, I think, what's around $4 billion of net debt. Remember, you got to take out cash. But in 5 years' time or less, they got a lot of debt coming due at the company. And don't forget, of course, Morgan, the most important thing is you were talking about this before we started the show, 100 million shares a year ago of this company. Now they're 520 million. Usually your stock goes down when you issue an additional 420 million shares, or roughly 4 times the actual number of shares you had. Not in this case. This has been such an interesting week, of course, with Mudrick Capital and that sale where they were basically buying stock and selling it very quickly. But Mudrick, as I pointed out, was really involved in the debt side. And I can't tell you at this point, they're from what I'm hearing, they're entirely out, Mudrick. They don't own any stock, which they didn't own for very long. But more importantly, where they really were playing and created a lot of value for their fund holders were the debt securities. They were the first one to really, this first lien debt where they took $100 million at a 15% coupon. Now they're out entirely at Mudrick. So they're no longer part of this story, but the story goes on.
Yeah, it does. And I mean, just to go back to the conversation we were just having with our market guests, I mean, we're talking about companies that are loftily valued right now, and we can talk about the fervent nature of the trading and the speculation and the role it was just mentioned about the shorts in here and how much that's actually impacting the dynamic and et cetera. But these are also companies, whether it's AMC or GameStop that we're talking about, that still exist in the Russell 2000 value index. They started getting bought into because they were looked at as value plays on the retail side. So I think that also speaks to this dynamic around value trading and how that is changing, Carl.
It's true. And AMC alone, guys, as a percentage of overall NYSE volume this week is mind-blowing, to say the least. David, we're definitely in a mode now where the street's just giving up. Wedbush today raises their target on AMC to $7.50 from $6.50. They say they could envision as high as 10, depending on how they reduce their debt and create some opportunities. I see B of A today stops coverage of Bed Bath and GameStop, saying don't listen to anything we've said about it. They have stopped trading on the fundamentals. So this was a real morning where the street just shrugged their shoulders.
And listen, to be fair, Adam Aron in that release yesterday when they sold shares said similar things in terms of don't rely on this current stock price to be anything near where it is. It does not allow itself to be subjected to traditional securities analysis, I think is fair to say. If you want to share that, I mean, here's some of the numbers, right? I think their peak operating cash flow was $900 million. That was at peak revenue. Now they've taken some costs out, maybe as much as $300 million out. So if they were ever to hit that peak revenue number again, you could argue they might even have as much as $1.2 billion in operating cash flow. But, Carl, that's in key question because of all the changes in behavior that have gone on. So how many people really will go to a movie theater? Meanwhile, even if they were to get back to $900 million in operating cash flow, what's it, a 6 to 8 multiple? It's still a declining business. You can figure out what that's worth. A lot less than the current stock price. But to your point, none of that seems to matter right now.
Shepard Smith here. Thanks for watching CNBC on YouTube.